Wow, gold on fire right now. Monster move yesterday. We broke not one, not two, but three important resistance zones. Everybody's asking themselves right now, how do I get in on gold? What's the right strategy? And what gold miners do I need to buy? In today's video, I'm gonna give you 5 mining stocks, including a fan favorite that I really like, that could be interesting for your watch list. But more importantly, we're going to talk strategy, how to play this new development in gold. And we're going to talk about one very important new fundamental data point that came out. This is a big show, but it's a really important show if you're interested in investing in gold or the gold miners, or you're already in them. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and months. Welcome to Hot Trades of the Day. My name is Daniel Helmy, and boy, did yesterday's move in gold feel good. Whew. Yeah, we needed one of those after the past month. A monster up move. As you can see here in the chart, we not only took out this previous high zone around 4,130-ish, which we doinked off here and here, we broke the 50-day. And then the party really started. And we even knocked out 4,215, this resistance zone right here, and closed above it. And yeah, and today, the Asians and the Europeans are like, wait a minute, there's a party going on in gold. We want to be invited. Wow. Well, if you followed this channel, you did not miss the bus. I've been telling you for a month now, hey, adjust to the new situation, put some money to work. Now, the question now is obviously on everybody's mind. Well, are we in a new bull market? Is this it? And what's the right strategy to play here? So, first things first, what we saw yesterday was a classic short squeeze. Clearly, there were big players, especially on Wall Street, short gold, and they all got caught with their pants down. How do I know this? Look at the way the gold price moved after the Americans entered the market, the trading day. So I'm not a huge fan of short squeezes because they're usually a little deceiving. But it was so massive, and we broke through the 50-day moving average, the purple line that you see here, and we broke 4,215, and we closed at the highest point since mid-June, so almost 2 months. That are significant developments that do change this overall complexion of the bottoming phase. Now, I've been telling you for a month, if you follow this channel, don't get too bearish on gold, don't sell your gold miners, don't sell your gold, use weakness to accumulate. Don't get carried away by the gold bears that tell you gold is going to collapse and the gold rally is over. Now I will be the first one to tell you, don't get too bullish too fast. This was a really important step. We basically condensed days, weeks of price movement in a day. That's what happens with the short squeeze. Meaning, did I think we would break the 50 on the first try? No, I'll be honest with you guys. I did not see that coming. Did I think that we would then break 4,215 and close above it? No, I'll be honest, I did not. But that's what happened. So that changes the overall situation in the gold market. However, you see the golden line there, we're still below the $200 moving average. So to say we are in a new bull market and we're going to rock straight to 5K and we're going to get the multi-baggers in the mining stocks, that's a little too euphoric. What is the most important thing now is not how high gold can go. We very clearly know where that will be. That is this yellow resistance zone right here from the October top. Support here, support here, support, and then resistance here. And that's around 4,325 to 4,400 because the round number will be important. So that is the next big step. Will we run right through this and go back up to the 200, which is probably running around 4,500? It's possible because we got strong data from the gold markets itself, but it's not likely. So what I care more about is how does the gold price now behave when we get the correction? That is the interesting part for us, not the upside part, right? The downside part. Meaning, and if you follow this channel for a while, you know what I'm talking about. Are we breaking down to new lows, or are we stopping at 4,215 or the 50-day moving average? Or even 4,070, 75, this support zone, which would mark another higher low. Remember, with yesterday's super move on the close, we also marked a higher high in gold for the first time in a really long time. We now have two higher lows in a row, and now we have a higher high. So that is a clear change of trend, but that does not mean that gold is going to go to the moon right away. What's more realistic is that we're going to consolidate, gain strength, and then slowly find more bullish structure with another higher low, which means we're going to get good opportunities to buy gold and the gold miners. We don't need to rush in. Now, we need to put money to work. I've been saying this for a month. I was out buying yesterday. I added to my positions because with what we saw yesterday, and if today holds, you see the green candle from Asian European trading, if this holds in US trading, then that's another strong confirmation sign that things are shifting. And now, if you watched last weekend's video, I think it was the Saturday video, where I said, okay, I'm about 37, 40%, 4K is the bottom, and 60% we're going to get the undercut. After what happened yesterday, we have to adjust our thinking, and I'm now in the camp where I say 60%, that was it. But that was it doesn't mean that we're going to the moon right away. It just means that was the low of the bottoming phase. We're going to still get corrections. And remember, yesterday was a short squeeze. So how much additional buying is going to come in now and support this up move? Do investors want to see what's happening in the correction if the break of the 50-day holds? If that holds, yes, then you will have more people coming in and say, okay, that was the bottom. I need to put money to work. So I adjusted my percentages, just as I told you on this channel, my investment percentages in the gold miners and the silver miners. I bought both yesterday. I'm not in 100% because, again, there's still a chance that we're going to go lower. Historically, we see rallies in August quite often in gold, and then there's another correction leg coming in the early fall. That's absolutely possible. The question is only how low will that take us? That's what I'm interested in, because that's going to tell me where we stand. So I don't need to run out, and I'm not your financial advisor, but I would not suggest that you do the same and buy up all your mining positions at these elevated prices, because all the miners have jumped 15% and some even more in the past 2 days. We should get better prices. But we should also adjust our percentages, investment percentages, according to this new situation. Now, let me get you the really interesting new fundamental facts that came out. And that is the central bank buying in the second quarter. And this is actually, let's get to this in a minute. Here we go. This is courtesy of the Kobelsi letter on X. And it basically states that we have seen massive increases in central bank gold buying in the second quarter of 2026. You see here the numbers quarter over quarter. The gold purchases of central banks was up over 400%. And that is very important for us to know for two reasons. The first one is the central banks are buying aggressively. They use this correction to aggressively accumulate gold. And the Kobelsi letter brought out a graphic as well. And I'm just going to move my ugly face up here. That's going to show you the central bank purchasing of gold by quarter. So the bottom, the brownish area, that's Q1. The baby blue is Q2. The pink is Q3. And then the dark blue is Q4. So, and this goes all the way back to 2014. And first off, we see the massive central bank buying that has started since 2022. Since Russia invaded the Ukraine, we got the start of a new second Cold War. And obviously, the BRICS trying to make themselves independent from the dollar. That's all not that surprising. But if we go to the far right of this graphic and we look at the brownish square and the baby blue square, so Q1 and Q2 of 2026, then we see obviously a central bank buying way down in Q1. So it was the speculators that were pushing up the gold price and the trend following investors. But the interesting part is the baby blue part. Look how huge that square is for Q2 compared to the previous years. You basically have to go back probably 21 or 19 to get in the ballpark of the gold that was purchased in the past quarter this year. That is really interesting. But the second part that's interesting is everybody who pays any attention knows that the central banks have been buying gold. And nobody cared in the past month. And now this data comes out, and all of a sudden, people care. This is what I've been saying on this channel all the time, right? The facts are fine. We need to honor the facts and we need to look at the facts, but it's the narrative about the facts that's important in the markets. All of a sudden, we are clearly seeing the narrative for gold is shifting. That is just as important as this very impressive number, or worrying number if you work for the for the Fed in the US and you're worrying what's going to happen to the dollar, is we have a shift in the way the market is perceiving gold information and gold data. And that is important. That's just as important as this big green candle that we saw. So the strategy right now is don't get too crazy with the mining stocks buying. We're gonna get weaker prices again. I know after a day like yesterday, it sure doesn't feel like it. It feels like we're gonna run right back to 5,600, but we are still below the 200. This is massive structural improvement for gold. Absolutely, no denying that. I'm really happy to see it, but this is not a bull market yet. This is a bottoming phase, and a bottoming phase is volatile, and we're gonna get weakness again. The thing is, the mistake that a lot of investors are gonna do is they gonna look at the weakness and say, well, I'm gonna wait till we're back down at 4,000 area, 4,050, then I'm gonna buy. Because that's where we were in June and July. And that might never come. And then the market turns and starts to grind higher, and they're left out in the dust. And that's what we want to avoid. And that leads us to, hey, here are 5 mining stocks that I think could be interesting for your watch list. And you will see that they all have a theme in common. And that is they look excellent and much better than the gold price and the majority of the gold miners in the charts and the technical levels. The first one, Lundin Mining, it's a blue chip. It's one of the big blue chips, and look how good Lundin Mining looks. Perfect. Above the 200, above the 50 now again. The bullish consolidation, the flag pattern we see here after a big move up. This is textbook. So even if we would get a severe correction in gold again, this stock is protected on the downside very nicely by the 200 and the lower end of the sideways range. We have a gap open that could get filled here, retest of the 50. Maybe we even undercut it and fill this gap. So there should be opportunity in this stock to buy it at a lower level on a pullback. No need to chase it. So next one that we're going to look at, a favorite of mine, I've pointed out on this channel, Montage Gold. That's one of the best looking gold stocks you're going to find. Break out of the flag pattern. We just looked at Lundin, still in the flag pattern. Well, Montage is like, well, I'm going, so you can follow me later because I'm already rocking the breakout. This looks great. Just like we saw here in 2025 or here in the end of 2024, beginning of 2025. Uptrend, consolidation, breakout, gone. Consolidation, breakout, party time. So this is really looking poised and ready for some Wayne's World party time, excellent action. And we can probably try to buy it on a retest of the breakout level. If we don't get it, we don't get it. But that is a possibility. And this stock looks outstanding. And again, above the 50, above the 200, that is what I really like, because we want to invest in the stronger mining stocks. They're going to give us the upside power if they are large, because that's where the bigger money is going to flow into, and they're going to give us more protection to the downside. I mean, look at Montage. This is here. This is January 2026. This stock is up. This is almost a double. And we all know where the gold price is compared to January 2026. Even if we take the super duper highs of January, when gold rolled over, we're still up like 30% in Montage Gold. Those are the winners. Another one that I really like, Artemis Gold, known for great grades, low production costs, big 3 days. Yes, it's getting very overextended. And yes, on this one, you might want to wait because the earnings are coming today, but they're probably going to be good. And I think this is what this huge move also implies. It's anticipating good earnings. But boy, yesterday, monster move, right? Broke the downtrend that has been in place since January 2026. So way ahead of the gold market, and it jumped over the 200 moving average. Again, let's see what the earnings do if they play out. This definitely should have the potential, if gold consolidates, to consolidate probably down to the 200 again, so we can get it a little cheaper, right? Or if things get a little more dicier, meaning the correction is going to be a little longer, then we might get a gap fill here and a retest of the breakout of the downtrend. That would be perfect. Last two real quick, Equinox Gold. You know Equinox, it's one of my favorites. It is the senior producer, super growth story. Has some risk to it, right? They have taken on a lot of debt. They're making big moves now, but I love managements that make big moves. So I remember last time I talked about Equinox, I said, hey, you can buy it in the $9 area and the pullback probably. That would be my buying zone. I want to say that was in May, June. So we hit that perfectly right here. If you missed that video, if you like this type of information, if you want to be ahead of the market, hit the subscribe button. It doesn't cost you anything. How great is that? So we hit that zone perfectly. And now we are moving higher, as typical with Equinox. It always has, as you can see in the chart, wild jumps on the upside. I mean, we ripped open two serious gaps. So I expect at least a gap fill of this one here, and that would mean you can get it around 960. Might have to be patient for this one, yes. Let's not chase, let the prices come to us. Or maybe this gap gets filled as well. But Equinox Gold, if you're willing to take on more risk in the senior producer part of the mining universe, I really like it. I'm a shareholder, full disclosure. And then to round things out, fan favorite that I like, smaller stock, Banyan Gold. They were at the Rural Symposium. If you were there, you probably saw them. Now, they're not as far advanced as Montage as far as the breakout is concerned, but you can clearly see that's what we're setting up here for, right? Big up move, consolidation, but 2026, look at this, only higher lows. We love this. Above the 200-day moving average safely. Never even came back down to test it. That tells you something. That tells you there's zero selling pressure compared to gold, compared to some other mining stocks. A lot of the seniors still, now Banyan is not a senior, Banyan is an explorer, and it's about a 650 mil Canadian, so smaller stock, but big difference in the charts to a lot of the other mining stocks, and that's what I love. We jumped about back to the 50, but again, as you can see, we're near the resistance zone. High chance we're going to get a short pullback, maybe gap fill, maybe retest the 50-day moving average. So that would mean we can get it about 142-ish, 145-ish. That is an interesting stock to watch if you like the explorers. Now, do your own research, search the company if this fits your risk profile. I'm just showing you the charts. I'm showing you 5 stocks that show great relative strength to gold and the miners. So those are the ones that are going to run first. And also have the possibility within the charts for us to get in cheaper, where we don't have to chase. We can get in cheaper if gold is going to correct again. And it will. It's not going to go to the moon. But what we saw yesterday was very positive for gold. And with that, I wish you a golden Thursday, or as they call Thursdays in Poland, Little Friday. We see us tomorrow. Bye-bye.